All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Thanks so much for taking the time out of your day to join me this morning and every morning, 9 a.m. Eastern Standard Time here on the YouTube channel. Today is a very special day. My apologies on Friday. Friday I said that our anniversary was on the 15th. It's actually on the 17th. So my apologies again. October 17, 2014 is when I started GAR Capital. Wow, feels like so long ago. 3 bear markets we went through, 2018, 2020, and now. So what, about every 2 years or so we've had a bear market in the market, but I think that's a testament to how long we've been here and how long we'll be here. We'll be here in the future as always throughout all the craziness in the markets. We love to do it. Thank you again for your support, guys. It means the world to me. I mean, without you guys, we don't have a company. It's kind of pointless to do the YouTubes and the social medias and the news, getting a Bloomberg to inform you guys. That's what it's all about. So again, from me and the entire staff, thank you again for supporting and watching our channel or retweeting anything or sharing our posts or even pressing a like on their posts. That's a support. Thank you again. As always, let's go ahead and get to work. It is Monday, October 17th, 2022 on a Monday. Let's rock and roll. We're going to go ahead and bring up S&P futures. That was Bloomberg. I did forget something that I wanted to show you guys before we do anything. So let's start with the Thinkorswim first, TOS, go over the markets, and then we will do the Bloomberg stuff together. Dow Jones this morning up 377 points, NASDAQ up 2%, S&P up 1.66%. How about the Russell up 1.86% this morning? Crude is up 1%, gasoline up 1%. 10-year Treasury yields 3.914. That 4% level seems to be holding on as resistance slightly, at least. We broke above it slightly. On the 13th, we broke above 4.05. That was post-CPI. The dollar index is starting to slide, testing that 200 MA on the hourly. Again, does it bounce from there? Does it break? That remains to be seen, but that's a key level. A volatility index, even though the markets are higher this morning, down 0.84%. Interesting, on Friday, with the market being down, the VIX was down very, very slightly. So VIX acting a little weird this morning. Natural gas futures flat. Gold futures up 1.38%. Thank you, dollar. Silver, same as well, 4%. And let's go ahead and take a look here at Bitcoin futures up 2.38%, 19,565 and 1,320 for Ethereum. I wish 13,000 for Ethereum, but no, we're not there. Euro dollar up 52 pips. Thank you, US dollar, for falling. 148.66, down 12 pips for the dollar yen this morning. So that's where we are. Let's go ahead and kind of talk about something that's really interesting in the market. And again, you always have, prices. Prices always change. That's what we know. That's the stock market. But sentiment also changes with price. And the reason I say that is because I want to show you this here. And this is a tweet that came up. Let me go ahead and bring this up. If I can bring up this tweet. All right, so this was a tweet that I posted or that I reposted the other day. Here, check it out. It goes, this is from Jason Gofert. I don't think people really appreciate what's happening in the options market right now. Last week, retail traders bought $19.9 billion worth of puts to open. They bought them only $6.5 billion in calls to the open. That's the first time in history we had 3 times as many puts as we did calls. So again, that's important. Why is that important? Because when everyone is on the same boat, whether long or short, you usually get some kind of reversals and turnarounds. So again, I did expect overnight, last night, I was talking to the team that we may get a little bit of a boost in the morning. Does that really change anything? Not really. I mean, it's short term. But again, we're back to those June lows. That June low is a very, very big magnet. In order for us to really start talking about anything in regards to a bullish level, and again, I have 3,800 as the level that I'm looking for, 3,825 for a continuation. But again, remember, we sank and then we bounced and then we sank, we bounced, still kind of hovering around this 36, 39 June lows. So really the level we're looking for here, at least on the hourly, short term, we do have the 200 MA right around 36.73. Last week, we only had 2 signals sent. We did catch SPY puts last week. But again, it's such a choppy market. I mean, it was very difficult to trade it. Hopefully we get a little bit more of a clear direction. So again, 36.73, I mean, you know how I feel about the market. I mean, I bought stocks again last week with SPY-G. This was an interesting note written by, this is from Let me go ahead and get both. This is from Mike Wilson of Morgan Stanley. And I want to show this because he's been the one that's been on point with the bear call throughout the year. So obviously it's important to see what he says. So what he's saying is that inflation bull trap can lead to an equity rally. No rest for the weary, as days like the weeks and feel like months in terms of price action. He's not wrong. So basically what he's saying, let me go ahead and give you the cliff notes. If you want to read the note, it is on Instagram. Again, this is from Morgan Stanley. You could see here that he has a target, a short-term target, I believe, which was 4023 or so, or 4,000 or 4,100. I'm trying to see exactly where that was. Okay, here we go. So how far can this bull rally run? We think 4,000 is a good guess, as any would not rule out any other attempt to retake the 200-day moving average, 4150. This is S&P. While that seems like an awfully big move, it would be in line with prior bear market rallies this year and prior ones. The other factor we have to respect is the technicals. As we noted 2 weeks ago, so have we, the 200-week moving average is a formidable level in the S&P 500, and we haven't taken that out. Remember, it's weekly close. We still closed above it on S&P futures, or below it on S&P spot. Obviously, Friday's breach of the closing basis is a notable, but given the positive divergence in many momentum indicators, RSI and MACD, combined with extremely bearish sentiment, we talked about that. When everyone is bearish at the same time, any little blip of good news, you're going to soar. And that's what happened last week. This is exactly where the equity market should take a stand if one is going to happen. We did not try to trade the lows in June, mainly because we hadn't reached the 200-week moving average, but now we have. And in the absence of hard data to confirm recession has arrived, i.e. negative payrolls, we think this is a good spot to cover some shorts and let this bear market breathe. Finally, if the market cannot hold a 200-week moving average, then it's likely no meaningful counter trend move. Instead, we make it straight to 3,400 or lower. A break last Thursday's lows would seal the deal in that regard in our view. I think pretty much everything that Mike Wilson's saying there is pretty much on the head. And let's go ahead and break it down together. We're going to go and bring up that weekly, and you could see that 200 MA on the weekly. That's held for the past 4 weeks. Now again, could that be a bottom? That's really dependent on perception, obviously. I think we get to the point that we're just going to bake this Armageddon every day. We're just expecting the worst. You know, people have asked me, when are you trying to buy stocks? I think we're getting there. I think that 200 MA, but you have to keep it tight. Remember, if you're looking for a 5-year period, a 5-year window, it doesn't matter what you do today, because if you're going to sit here and tell me that we're not going to be higher in 5 years, I don't believe that to be so. But again, if you're looking at short term, maybe seasonal, maybe just trying to get something by the end of the year, 200 MA is a pretty good support level. So let's kind of keep 3,600 in our back pocket as our level to, if you open any new position, that's probably the position you want to cut out. Maybe some futures trades to the long side. And the only reason we say that is because it's been holding. But if it breaks, it's ball game. You're going to probably get to 3,200 right here. You see this trend line here? We could possibly retest that. So again, I hate to buy stocks on a green day, obviously. But again, if we start, getting close to that June lows, 3639, 3,600, as long as that weekly MA holds, I may want to take some risk here. Again, sentiment is so low. Again, we already saw the public 3 times as many puts. It's starting to feel like a bottom a little bit, guys. I'm a little bit more confident now reading those notes, seeing the 3x puts versus calls. I may want to take some added risk here. What does that mean? What do I want to buy? Well, obviously SPY-G every week. But sorry, start stock picking here. Not a bad idea. Banks have been underperforming, as we know. Bank of America did have their earnings as well. They beat. Let's see if I can find that. Let's see. Bank of America, 81 cents versus 79 cents, 24.5 billion in revenue. That's a beat, 23.6. Trading revenue up 13% year over year. Investment banking revenue is a miss. Obviously, no IPOs with a bear market. FICC, 2.6 billion versus plus 27% year over year. And equities, again, FICC is fixed income. Equities is 1.5 billion. They're down 4% year over year. So well done to Bank of America. Great company to own. I agree. I don't own them, but Bank of America is part of some of my ETFs. So again, I'm happy that Bank of America did well. So back to this level. Am I ready to call a bottom as of yet? Really, what's remaining for us? Okay, let's go ahead and break it down. No economic news this week. We've already kind of discussed that. We'll go do that again if you want. And then I know we're going to get to the questions. This one may run a little longer because it's a lot of stuff going on, at least on the macro front. And the chart front, excuse me, not macro front. So with Empire Manufacturing Index, I'm going to read that note from Bloomberg this morning. We have building permits, housing permits, crude oil inventories. We have that every week. Beige book. Don't worry about it. The Fed speakers. I think we already know what they want to do. They want to raise us to oblivion. Fair enough. Thursday we have tons of FOMC speakers. So again, those are your landmines. Let's just call it, where every time they talk, let's see if I can find earnings whispers for this week. I know I retweeted it. Here we go. Okay, let's see what's reporting this week. We have Goldman Sachs tomorrow morning. I own shares. Johnson & Johnson, I have that in my ETF. Lockheed Martin reports tomorrow. Netflix reports after the close. United tomorrow as well, excuse me. ASML, Procter & Gamble, Ally, Abbott. Oh, they report Wednesday before the bell. Tesla on Wednesday after the close. That's a big one. Lam Research, Alcoa, IBM. Thursday, we have AT&T, American Airlines, Nokia, Nucor, Dow Chemical. And then after the close, we have Snap, CSX, Whirlpool as well. Whirlpool probably give us a big indicator for housing because when you buy a new home, home builders do get their appliances from a Whirlpool or General Electric or what have you. So again, let's see what Whirlpool says regarding their deliveries and see if we're getting a little slowdown in demand. Verizon and American Express, Schlumberger will be on Friday. So next week's earnings will be the big one. The Apples, the Microsofts of the world. I assume so. I don't have that date in front of me. But again, earnings, that's kind of the big one this week. Tesla, Netflix. I mean, how low is that bar that we got for everybody? How bad is it out there? So again, we're going to take our step by step and go from there. So one more piece, and then we're going to go ahead and answer some questions. Let's go and bring this up here. This is from the market blog on Bloomberg. Okay, futures stay strong despite disappointing Empire Index. That was the New York Fed Empire Index. Showed state manufacturing contracted for a third month in October, while prices paid rose for the first time since June. Investors focused on better than expected big bank earnings and sliding yields. We'll go over the yields here in a second, which boosted techs and mega caps ahead of the bell. So again, you could see now the NASDAQ futures up about 2% this morning. They're leading the way. The Empire Index showed a gain in prices paid corresponding with a rebound in oil. And we'll go over the oil chart here in a second. University of Michigan inflation expectations had risen along with higher gasoline prices. Meanwhile, consumer spending was still growing, a bit at a slower pace, according to comments from B of A. Watch for potential signs of concern as bank analysts call continues. That's from B of A. Okay, we got that out of the way. Okay, let's go ahead and bring up some charts together really quickly and then get back to the question and answer session. Crude oil here, you can see that we are bouncing off this key level 85. You remember that yellow line. We had this pop to 93, and then we came back down. We're right near the 20-day moving average on oil. If we do fall below that, energy has a little more to the downside. Right around 75 would be the next target. I say that we do hold here. I like energy for stock pickers. I like Chevron. That's what I do own. That may be a stock that I want to go ahead and buy some in because I will get dividends as well. And we know that energy, again, with winter coming up in Europe, it'd be a little volatile. But again, versus the mega caps, I mean, energy has outperformed. And if you're looking for stocks to buy or stock picks, again, mega cap stocks, tech has been beaten down, growth tech has been beaten down, anything in the tech sector. So again, you can go to FinViz and we can start looking at groups at the names that have been absolutely pummeled year to date. Energy is leading year to date 32%. Utilities in second place, down 12. Communication services, that's Meta, Google, Disney, those names. Technology, we know what that is, Apple, Microsoft. Consumer cyclicals, Amazon, Tesla. Those three sectors are the worst performing sectors. So if you're looking for a possible turnaround, maybe this 200 holds up, those are kind of the names you're looking for. Maybe Tesla reports stronger than expected earnings. I would probably wait for the earnings call before buying any shares of Tesla. You want to see where they are in terms of earnings and forecasting. Are they still growing? The next one is real estate, obviously with higher rates. Home builders have been doing pretty decent. Small caps. How about small caps? That's one thing I was looking at this weekend while I was watching the Cowboys lose last week. Congratulations to the Eagles. They're a hell of a team. Take a look at this. Kind of holding up over this support here around 165.74 was bring up the weekly. It did break below the 200, but again, look at this. Kind of holding up to those pre-pandemic levels. of 2019, right around 168.54. A round trip completely for IWM. But again, if IWM, if we do get a nice little rally, IWM will probably lead the way. Small caps tend to lead the way up or down. So let's keep an eye on IWM this week, guys. If we do get a turnaround, that's going to be the name to watch. We'll go ahead and also take a look at some yields this morning. Here's on a 3-day basis on a 2-year note. We're testing kind of the baseline here of around 3.9%. On a 10-year, 3.89 or so. How about a 2-year yield? 2-year yield still very elevated. Would like to get it below 4.3, but again, below 4.5. That's a great sign for the market, and that's why the market is cheering it currently. Let's answer some questions. Good morning, John. Thoughts on Apple calls this week? Oh, and congrats on the Clasico win this weekend. Congratulations, Real Madrid, for a great win. Had some wins this week. Real Madrid won, Yankees won, Cowboys did not win. But I didn't expect the Cowboys to really win either. We do have a backup quarterback. Great to have that back. Thank you, Cooper Rush, for getting us 4 wins. I'll take it. Eagles are just too good. They're juggernauts. They're a very good team. Let's see. Apple calls. Bring it up. Apple had a nice note this morning. Let's see here. I wrote this down. Apple added 1.4% pre-market after Morgan Stanley named it a top pick for its ability to withstand an economic downturn. I agree. I love Apple. Apple's my largest holding in my only holding in my IRA. Interesting here. On Apple, I did share that information with you guys. Here we go. I always share that with you guys on Twitter. It's the names that are moving this morning from CNBC. So again, look at Homer. And you can see here, stocks making the biggest moves. The Apple call was there from Morgan Stanley. So, first thing in the morning, join us on Twitter. I always post all the news and information that you guys need to set up your day. Let's take a look at Apple now. Again, below the 200 MA on the hourly. Let's see how we open. I would like to see a break of 144. If you're looking for a break here, maybe you want to get under it, maybe wait for that 200-day. I just wouldn't want to run in and buy stocks or buy calls right at the open. Give it a little bit, maybe till 10 in the morning. If we can get above 144, I'd probably take a look at the 148 calls on Apple. There is a gap to fill, John. Take a look here at 138. So let's take it easy and see where we get from there. But again, this could be a nice short squeeze as well. Any news on Roblox? Are we still going to hold for the position? I am still holding Roblox, yes. My stepson plays Roblox. Look at that. But these are the small caps. These are the aggressive growth names. When you get a nice short squeeze, this is what happens. Let's see if we have any news on Roblox. Okay, Roblox news. Let's see. I don't want to put Roblox news. I want to put RBLX news. Let's see the news here. Okay, Roblox reports for September 2022 key metrics. Daily active users were 57.8 million, up 23% year over year. That's going to help. Hours engaged, 4 billion hours. Jeez, 16% year over year. That's growing. Estimated bookings, 212 million to 219 million. That's 11% to 15% year over year. That's pretty decent growth. Estimated average bookings per day, it was down 7 to 10% over year. Estimated revenue was 171 million and 180 million, which represents a change of negative 2%. What they're stating is that the strengthening of the US dollar is hurting. That is an impact of around 6%. Their bookings would have been higher, around 17 to 21%. The dollar is just going to hurt everybody. But again, there you go, Roblox right there. Nice numbers on Roblox. I guess my stepson is helping out with the cause playing that game. But that's why the numbers are higher today. Thoughts on this week's trend? Carlos is asking. Not much of a trend per se, but again, you're probably expecting a little bit of a counter rally. Again, we talked about 3 times many puts versus calls. Your recipe for a short squeeze. I'm not saying we get to 4,000 tomorrow, but I'm saying 3,700, where we talked about last week. Possibly 3,825, and then we roll over. That's not exactly out of the realm of reality. We can get that bounce, but the key level, guys, the key level, really the trend, if you're looking for it, is that 200 MA. If that breaks down, guys, we can get down to 3,200 in a quick second. I doubt that's where we get. I think that 200 MA holds. I know, uber bull. What can I say? But I'll just bring it up again if I have to. Seasonality. Don't want to let this go. But seasonality, remember, in October, we do tend to bounce a little bit dip towards the end of the October. November is the strongest year seasonally. In December, and again, this is midterm election year seasonality. So we will see. Mini rally, back end of the earnings, back to trenches. There you go. That sounds about right. Or you just get a little mini rally. Maybe the earnings are terrible. The only thing with that, Zuko, is that the actual expectations for earnings are so low. I mean, we got the dollar, we got slowing demand, less capex spending, lower stock prices. We know the drill. Consumers are still spending, but that dollar really brings that bar low. And again, all you need to do is step over that bar a little bit, and then you get an ignition like Roblox. Could be. What's a good price to buy Apple if we indeed hit the recession era? Well, remember, guys, we are in a recession technically. I mean, you can call it whatever you want, but that's where we are. I think the last call where you're just like, man, this is it, is really 129. That's your low. That's the low that we've had from June. That's probably the target you're looking for. I can't add any more to my IRA. That's maxed out anyways. So again, from the beginning of the year, I didn't get the best price, obviously. But again, 129 would probably be your last stand. That'd probably be the level that you're looking for on Apple. And I own a lot of Apple due to SPY-G. So to be fair, I don't want to add Apple to my portfolio when it's already such a big part of it. I'd rather look at some other names as well. Really, I want to add to some more Goldman Sachs and JPM. But again, I'm going to wait for Goldman Sachs' earnings to come out and see where we go from there. Maybe possibly add some Tesla, especially at these depressed levels. I mean, look at this. We're back to what? We're back to March 2021 levels. Not near the 200-day weekly. That's though yet. So again, about $50 away. Maybe we can get there. And there's some levels where it just gets too good to pass up on a Tesla. How about Microsoft? One of my favorite guys. 214.54. Maybe nibble there. Not bad. Not a bad place there. The 200 MA on the weekly, very similar to the S&P, but Microsoft is outperforming the S&P, at least on that relative basis. So 214 or so. That'd be something that I'm going to watch for. But again, I'm going to start taking a look at what else is out there. But again, 200 MA, that's key. We'll keep an eye on everything as we go. Have a great rest of your morning. Happy birthday to GAR Capital, 8 years old today. My little baby is 8 years old, born in 2014. We hope to see you tomorrow for the morning note. And have a great rest of your trading day. Dow up 392 on the futures. Let's make it a great one. See you guys tomorrow. Cheers.